presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Good afternoon, folks. I'm Tommy O'Brien, coming to you live from TFNN, 3 p.m. Eastern Time, final hour of the trading day, and the volatility continues. And we've had two-way moves. The market's in the red, but boy, quite the rally to kick things off. S&P's intraday up 1% from the lows of 68.01 up to almost 68.70. We've backed off a bit, and right now you see the volatility off by 0.9% or 62 points in the red at 68.44. Now we had Google with their numbers last night. Remarkable CapEx. They get it all back. You opened at 306. Google down just $2. Okay, we get Amazon tonight. We'll get over to them in a moment. The NASDAQ 100 down to 24,543 earlier today. We're more than 1% off that number as well. We're up 340 points from that number. In fact, 24,780. You're still down by 220 points or 0.9%. Remarkable volatility. Markets were in a bit of a free fall this morning. Dow, you hit 48,918. Okay, we're just off that low, but you're negative by 0.8%, off 416 points in the Dow, and the Russell off by 1.2%. No real bounce in the Russell, as you see. Nothing like what we got in some of the other indices. Now, we jump over to Amazon. We have Amazon numbers after the bell. And, yeah, they're getting punished this morning and just chopping around near the open. Amazon down 4.1%, down almost $10 at $223. Take a look at this thing on a daily. And, yeah, right back to where we were, the lows of December. And you got lows out here from November and October hanging out near 215. We take a look at the weekly on this equity. Now, they've been underperforming. You're right back to where we were a year ago on Amazon shares. Take a look at the volume. So 90 days ago, a nice acceleration. We haven't got much going since then. Coming right back into that number, essentially. The low there was 222.75. We're at 223.50, within 75 cents. All right, we jump to yields. So as it's been a risk-off day, and they're selling equities, the hedge in yields is back on, as in yields, a nice hedge. You got higher price, lower yields. They're buying yields right now, and you get the 10-year, as I mentioned at the top of the hour, 4.21%, 4.21. And what does that have to do with? Jobs. So you get a report from Challenger today that says the most layoffs in the beginning of the year since 2009, the weakest hiring since 2009. We have jobless claims that come in above 230,000 for last week. And weak hiring and layoff plans paint a gloomy labor market. So, yeah, maybe we will get those hikes a little bit ahead. Hikes. Get that word out of my vocabulary, right? Maybe we will get those cuts. And more of them than the market is anticipating. We go over to the Fed Fund futures. And yeah, look how quickly this moves, okay? Yesterday, look at this. Yesterday, the odds that we were going to get a cut at the next meeting with Powell, March 18th, was 9%. Today, it's 25%. Okay? You go to the April meeting. The odds we were going to get a cut at the April meeting yesterday were 23%. Today, they're 36%. Right? The odds that we get two cuts by the April meeting were 1.6% yesterday. Today, they're 5.6%. Okay, and then you go out to the first meeting with Warsh, which will be June 17th. Still only one cut priced in by then. But look at how even if you go to the odds that we get 2 cuts by then, 23% today, that was at 11% today. That's how quickly these yields are moving today. You get the 10-year at 4.21. We jump over the 2-year. And that is a move on the 2-year, man. Highly Fed dependent when you're talking about the 2-year, where the 2-year will be. Okay, and that's a move. You got higher price, you got lower yield. And even with lower yields, the dollar continues to catch a bounce. We're trading at 97.84 right now. So lower yields will weigh on the dollar, but not today. Okay, you got a bounce that's continuing on the heels of a new Fed chair that's been nominated, basically. Not yet officially, but yeah. And I guess the next discourse is going to take place about whether he makes it through Congress. You got powerful Republicans on the committees like Tom Tillis saying that it's not happening until this Powell deal's over and the hijinks going on there is over. And hopefully that does end so we can just move on, as is supposed to be the case to Powell. Excuse me, the Powell successor. And you had the Treasury Secretary in front of Congress today, in front of the Senate. And so Trump would decide whether to investigate the Fed pick Warsh or refusal to cut rates. And they're pressing the Treasury Secretary, of course, on the independence of the Fed and the investigation going on with Powell. And hopefully that does ease up. But one of the things they're talking about is whether it's like, anyway, to dig into it in terms of the Treasury Secretary saying the president's just joking when he's talking about suing Warsh. But the tough part about that, folks, okay, and the president can be a funny man, but it's not funny when, you know, it'd be like a boss joking about firing a worker and being like, haha, I'm just kidding, I wouldn't do that. And meanwhile, they're firing the other guy left and right. And the other guy might get put in a box because it's a criminal violation. So the president is suing the government for $10 billion. And he said on an NBC interview last night that he's going to be the one that decides. Hopefully he just doesn't decide to sue the government for $10 billion and say pay himself from our taxpayer money. And hopefully he doesn't decide to sue Warsh. And if he's joking, that's great. But hopefully the criminal investigation of Powell goes away so the next Fed chair can jump in and we can have some normalcy. And I think that's what you're seeing. As you're seeing yields abate a bit, okay, we are going to move on to the next Fed chair. And let's hope that that just moves on, because that's what you're seeing. You know, when everything happened with Powell, the 10-year spiked to 4.3%. We've eased now. We're at 4.21. You got a little dollar strength back into things, right? Metals paired some of the remarkable behavior they had going on. And that's a good thing on a longer-term basis, okay? Yields a little bit lower, right? Dollar strength not crashing. You know, you can have a reasonable move lower in the dollar, folks, okay? I was talking to Teddy Kegstad yesterday morning. Great segment, as always. He made the great point. You know, we are not in a dire situation, okay? Dollar weakness, that could be inflationary where you're talking about imports from abroad, but we're sitting at 97.84. A lot of the time, the last 25 years, we were weaker. We're coming right back, folks.
Trading techniques on how to begin your trading journey. You've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kekstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kekstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's off by 73. We take a look at some of the volume on a weekly basis. We already have more volume than any week we had, folks, prior to Christmas. Okay, we got up there. Yeah, check out the weekly volume. 7 million contracts on the S&Ps. That's going to be a bigger number, and we're not even done with Thursday yet. So it is going to be a large weekly volume number on the S&Ps. You jump over the NASDAQ 100, pretty similar. We're already at that number. You're talking about 2.6 million contracts. And you're going back to December 15th, the week of, when you had about 3 million. We check out the SPY. Yeah, same deal volume-wise. You're going to have a bigger number. Check out the Qs. Big volume weeks, man. Okay, we go back to the S&P futures. You jump back to the daily for a moment. And I mean, look at this. Imagine if we blow it away with volume. You need 250,000 contracts. We got 40 minutes left plus volume on the close. We might do it. Because watch this. Yesterday you do 2 million contracts in the S&P. We're at 1.7 right now. Oh, watch this. In the 5 minutes on the close alone, you're going to do like 50,000 contracts. We got to do 250 by the end of the day, and then look at the volume when you come in. So watch the end of the day how this happens. Okay? By the end of the day alone, yesterday was a huge day, but look, you did 100,000 contracts in 15 minutes around the close. You still did 20,000 contracts after the close in the first 10 minutes. Another 7, 10, you got a pop there, 6, 5. So you got some big numbers coming down. We're going to be right there in terms of the volume, which is just remarkable that you're actually trading lower and you're going to do it on increased volume. And look at where we're coming. Boy, you could break below. Nah, you're not going to get. All right, we're not going to do 2.3. I was going to say you might break below this with volume. You're not going to do the volume to break below that. Yeah, you're not going to break below the January 20th of volume as well. You did 851,000 contracts in the NASDAQ. Today we're at 664 so far. The market's given us a lot of great memes, folks. And, you know, keep your head straight. But I appreciate all the contributions in the Tiger's Den. Mike, Z, everyone in there. Because, man, but it's no joking matter. And I know you're not joking. I say that. I mean, be careful in this silver, folks, okay? You know, I told the story. You know, I was getting multiple emails from people who were subscribers in the Gold Report, folks, who are great traders. And I understood it. Saying, man, come on. You know, we're missing out on some of this run, okay? And this is literally right before this bubble burst, okay? And I'm not looking for some dramatic retracement, folks, but stepping into these prices, especially silver, okay? Silver is the ultimate speculative metal right now, and it is bubblicious, to put it lightly, folks. And just like you don't know where the crypto bubble is going to end up, right? And the Winklevoss twins, they're on the front page of CNBC today. Okay, was it CNBC or is it Bloomberg? They're somewhere. Was it Bloomberg? Let's pull up one. Yeah, it was. It was Bloomberg. Okay. There's the front page of Bloomberg. The Winklevi. They're out there. They're going to cut jobs and scale down, folks. The crypto sector is not going to save themselves by cutting some jobs and scaling down. There's a massive problem at the valuations we're at if this does not hold up. So I see articles like that, even the headline. I say to myself, oh my goodness. Okay, you think that one's rough. Look at what's happening in Ripple today, folks. How's this one? How's that for a chart for you? You talk about a disaster. From 368 to $1.16, man. This thing was stratospheric. And you're only going back to 2025. Solana down from 255 to 80. My goodness. That was, this decimation of the altcoins and the leverage that people are able to use in crypto. And as I was saying, a friend said to me earlier, right? Oh man, why is it down 10,000 today? And I said, I don't know. Why is it trading at 64,000? Why is it not at 6,000? Right? Supply and demand, just that simple. But there's really no arbitrary case. Bitcoin can still be around. You can have a store of value in that if you're using it to instantaneously transfer something, it can be transferred. But it's not a store of value. And there's no reason why you should be back below where you were prior to Trump getting elected with everything going on, okay? Trump is a crypto billionaire, minted basically since he's become president. So for crypto to be under where you're at then, you better have some alarm bells going off. When the guy in office, okay, and, get the politics out of it, right? The guy in office has become a literal crypto billionaire with his family in the last 16 months. If Bitcoin is not higher with that going on in that environment, then what is the growth prospect future? It is worrisome, man. And it's not done, okay? But the worrisome part about this is the ultimate growth stock, folks. And I say that as in it's almost the ultimate meme. It has no inherent value other than a store of value of what somebody else can give it to you. And it still has a case use, okay? As in, crypto's not going away. The blockchain is going to change everything forever. So you can separate the two. Okay, there's going to be tokenized securities. That's happening, right? The cases that the Trump kids make. I saw some interview. I think it was Eric saying, I can transfer. Why do I got to wait? I transfer money Friday, right? Why do I got to wait until it's my money Monday or Tuesday? And he was catching a lot of flack of being like, oh, you want to transfer money, right? It's real. There's no reason why it should take so long for some of these transactions when you can be on a blockchain ledger system that crypto is. But that system, okay, I'm going to be able to transfer something, and there's no reason why I have to transfer Bitcoin that are worth 65,000 versus 6,000 versus 600 versus 600,000. And that's where you get lost a little bit on what the end game is here. If somebody tells you it should be at 100,000, ask them why it should be at 100,000 versus a million versus 10,000. What's the difference? Everybody can own Bitcoin. You can own fractional shares. And at this point, most people do own fractional shares. Nobody owns a full Bitcoin anymore because they were at 127,000, right? So what's the difference? I know I'm going big picture, but wrap your head around that one, because as long as you understand that thing can go down to 15,000, 2,000 in a heartbeat, man. Wasn't that long ago that we went from 20,000 down to 3,000 when Bitcoin started trading, right? In 2017. Well, here we are, folks, at 2021 prices. Gold, nothing like crypto, folks, okay? Gold's a real deal. It's a real commodity, but it's been a heck of a run, okay? You're talking about a run that just the 382 pullback, and we almost got there on this pullback, all right? I'm a lot more bullish on gold right now I am at silver. Gold, the highs in October, 43.92. You came back and you hit 44.23, okay? Right within that on that pullback. Gold's down 2.2%, but boy, silver down 12.7% at 73.63. And yeah, there's your weekly and there's your daily. So be careful, folks. You're coming back into the December volatility, right? But boy, not exactly a resounding buy just yet on metals, and just protect yourself no matter what. You want to be bullish, you want to have exposure. Make sure that you're going to be okay in the type of volatility we have going on. That's all. Because there are, just like in crypto, you're right, Mike, there's going to be a lot of people that get hurt in crypto, man, but unfortunately there's going to be a lot of people getting hurt already in silver. And just protect yourself, folks. We haven't seen a market like this in a while. Silver down 12.6%. S&Ps, we're picking up some steam to the downside, off 85 points yet again, 68.21. Remember, we get Amazon after the bell, and we're coming back with Tim Ord, folks. We'll talk some metals. We're coming back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's negative by 81 points right now. You got gold off $100 and To talk about some of the market action, folks, we're going to jump over to our man Tim Ord. You can reach Tim at his website, ord-oracle.com. There he is right there. And don't forget, at TFNN.com, folks, right under the Services tab, Tim's got 2 great webinars, The Secret Science of Market Tops and How to Identify Those Market Tops, as well as 6 secret ratios every trader should know. Some great ratios in there that we talk about on the program. Tim Ord, good afternoon.
Yeah, good afternoon. On Tuesday, we talked about, a couple methods I use to actually how to find bottoms in the market. And we're going to cover some of those. These are pretty high probability trades, but we're going to look at some how to pick out gold stocks. And a lot of them have already run up, but there's some that are just starting to come off the bottoms, and we'll look at those too. But this is the first one. This is aftermath silver. But anyhow, the market's going down, and this is a monthly chart. And I use the Bollinger Band because it really works well. So I combine the Bollinger Band with volume. Volume really plays an important factor how that market moves, or is it bottoming or is it not bottoming. And I came up with a method where you have to have a sinus strength through the mid-Bollinger Band on the monthly time frame. And that switches everything up. Momentum is very important in the market, and the longer-term momentum outweighs the shorter-term momentum. So if you got the monthlies going up, the weeklies will follow, the dailies will follow, the hours will follow, and so on down the road. So the whole key is to get the monthly going in your favor, where it's bullish or bearish. Obviously, we're just going to look at the bullish periods, but this is the first one here. We're kind of looking at. We got some more in front of us, but back in, it looks like, I don't know, this is probably November of 2023, you had a rally through the mid-Bollinger Band right there, if you can kind of see it. But sign of strength, maybe, maybe not. So it's kind of a question. The market kind of fell back. And the next time, it actually closed on the mid-Bollinger Band there. You can't quite see it, but you can see how the volume jumped. It's up about, 200%. Compared to it was, the previous October.
Huge spike.
So so you did have a big spike, and that's usually sets the mood for the thing to keep rallying up. So anyhow, there's another thing here I want to point out. We're going to this is what I call a cup. Anyhow, you're going down, and finally you get above the mid-Bollinger Band with a sign of strength, and it kind of just goes up. And we're going to talk about that later in the program here, but we'll keep an eye on that. But this is one. So in general, I give a buy signal somewhere below 20, maybe 18 or something, and it's still going up. And it's right now we're probably in the 80, 70, 80 cents. So it's a decent rally. So let's look at another one here. Here's this is another gold stock, Alameda Minerals. It did get above the mid-Bollinger Band right there, but if you look at the volume, really nothing happened. And the market did go up. It didn't go up a whole lot. It's 10 cents, went as high as about 20 cents. Now we're at about 15 cents. So it did go up, but you didn't have a sign of strength through the mid-Bollinger Band. That's what sets these two apart. So what I'm trying to emphasize, you have to have a sign of strength through that mid-Bollinger Band, and that sign of strength should continue as you move higher. And in a case like this is not. So this even though this is a gold stock or a silver stock, I'm not sure which one, it's not a buy signal. Maybe we'll turn it in a buy signal later. Don't know, don't care. But right now, I'm not interested in that particular stock. Here's another one. Actually, I had a few clients ask me about this one, and it's Brenix Metals, whatever, had a sign of strength, a decent one. Looked like volume doubled, so actually that was a buy signal. It kind of fell back below the Bollinger Band, and look what happened here over the last month. It's just a gigantic 40 million shares back through that mid-Bollinger Band. I actually did buy it back here, kept it, and I still own it, and I have a reason to own it, because now you got a huge sign of strength back through the mid-Bollinger Band. And
I know, Jesse, you've talked about, of course, with the risk on these, because this one's at 7 pennies, and I just want to make people know
That's
that
true.
there's a high likelihood that could go to zero. You're risking everything that you're putting in these. Is that right? And they're totally risk capital?
Yep.
So
but you
be
got the
careful
market
a little
going.
bit, folks. Risk reward is everything, and boy, you can. But just, to make sure that people know that it's a speculative bet in there, folks, for sure, when you're dealing, because the entire market cap of that one I just pulled up is only $55 million. So just to be aware of that risk when you're in there, folks, for sure.
Yeah, take that to heart. So there's another thing about this chart also. If you notice, I marked the lows here, what happened, and lows, I don't know, this it's at 8 cents right now, so that's probably 7 cents where that line is, this line right here. It's around 7 cents. You had a sign of strength through the previous lows. So what that implies is if you can't hold below the previous lows, it'll try to attempt to take out the previous highs. Well, the previous high in this case is that one right there, which is approximately 23 cents. So this is all technical analysis. There's no guarantee it'll get up there, but that's what the textbook says. If you can't hold below the previous lows, it'll attempt to take out the previous highs. Since you close above the previous lows with a sign of strength, has its first upside target to here. So anyhow, we'll see how that plays out going forward. But it's another one. This is a monthly chart. You have a sign of strength through a minor one. Now you have another one. So this is on a bicycle right now. What could fail, I guess, if you close below the mid-Bollinger Band, be a warning sign. Will that happen? Don't know. So pay attention.
And when you're managing something like that, Tim, I know you can always, just because you're risking it all doesn't mean that you're not. Do you have a stop really, or it's something like that? Whatever you put in there is basically your stop when it's so volatile. When you're playing at something at 7 pennies, are you even? Is that something that you'd even think about selling at any point, or you're just kind of looking at something and it's a risk reward where you're gonna enter it and that's your kind of risk profile?
Stops on this stuff, they'll probably try to hit it. I watch.
That's it. Yeah, they kind of don't work, right? So just be careful, folks. The money you're going to put in, it just might be the money that you have at play here, and it's just a risky investment, right? I would kind of agree that how you're going to play a stop on that. All the money you put in it, folks, should be basically the amount that you're risking, right? I would. Yeah. Am I? I didn't want to get ahead of you, but that's how I would look at something like that, right? Yeah.
Yeah, you put your stop at 5 cents or something, within a day. Yeah, they're just going to nail you.
Yeah.
So
it's a risk reward play. It's high risk, but guess what? As we know, with risk comes possible reward, and that's the business we're in, man. We got a break, Tim, coming up. All right, we'll stay tuned. We're going to talk to Tim on the other side of this break, and we'll finish it up. I see a couple other equities he's got ready in there, folks. We're talking metals. We're talking equities. We're coming back with Tim Ward. We got the S&Ps off 88 right now, and we got that gold contract trading off $118 at 48.31. We're coming back with Tim Ward, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Markets in the red right now. S&P's off by 82. Remember, we got Amazon earnings after the bell, and we're talking with Tim Ord. We're talking some metals, folks. Remember, you can reach Tim at his website, ord-oracle.com, and 2 great webinars over on that services tab at TFNN. All right, Tim, let's keep going.
All right, this is another recycled battery materials ink. So this is not a gold stock or anything. There's a symbol, but this is a monthly chart. If you notice, the Bollinger Bands are really squeezing together. And look what happened here. A sign of strength through the mid-Bollinger Band. And it actually continued for a couple of more, or actually, the first one came in July of last year, but we got through the mid-Bollinger Band in August. So that came in, I don't know, around a dime, or we're actually still there. But notice, as the market pulled back, the volume just dried up. So this is another one signaling probably a longer-term uptrend's beginning here. How high is high? Don't know. But anyhow, I'm just showing how these charts work. Here's one in the making. Notice the big volume there. But this is a mid-Bollinger Band
for
right there.
people, because they may ask, so are you talking about, would you think about buying that equity? I know it's a tiny penny stock, or is this just a hypothetical chart? Because you might have listeners out there saying, is he saying maybe buy that thing right now? I'm just asking. I know somebody may ask that.
Yeah, it is.
Yeah, okay.
It's a buy
perfect.
signal. We're using this method. It's on a buy signal. I actually personally own this one. So
nice.
it fell back a little bit. But yeah, using this method gave a buy signal on a monthly time frame. And it may fall to pieces, don't know, but it's doing everything it's supposed to be doing, because you had a sign of strength off the bottom through a mid-Bollinger Band. Market went up, volume remained big. Now it's consolidating, so volume is dropping off, and so far it remains bullish. The reason why I'm pointing this stuff out, I want to get to the. Okay, I'm kind of jumping forward here because we have a lot of information. But anyhow, these stocks, this is the USAS, which is American Gold and Silver, gave a buy signal back in, I don't know, somewhere in that vicinity. It doesn't really matter. What I'm trying to point out here is the first chart I told about the cup thing.
Yes.
Well, there's a cup and handle coming. All these stocks, this one here is run its course. This is another gold stock here.
That's a beautiful cup, man. And I say that seriously, as in, wow, I just put it on the monthly on my charts. Yeah, that is just such a symmetrical cup going back to the beginning of 2021. Remarkable.
Right. Well, a lot of these gold stocks are doing all of this stuff. The ones that have already ran up, they're not to be avoided. You just don't want to buy them right now, because once you get above, actually 100% above the upper Bollinger Band, which a lot of these have already. Right now, we're basically 100% above the Bollinger Band on this one too. So is the rally going to continue? No, it's going to do for consolidation sometime, and so don't chase them. But what happens next is, okay, we had the cup. What comes next is the handle. The handle, the strongest ones won't retrace. And I'll show you some strong ones Here's some coupling handles. They're not ideal, but they worked out that way. This is a SGS, which is basically a commodity index of all the commodities. That's pork bellies, that's gold, silver, that's corn, wheat. It's all of them, and it's actually breaking out here. And this handle, the ones you want to identify, retrace to the left. So the more tighter this pattern into the handle, this period right here, the more tighter that pattern, and the least retracement it has, the more bullish that pattern becomes. And if you notice, this one only traced 31.8% retracement. That was it. So at a minimum, that's the halfway point of the next move up. So it comes in around 40 on this one. There's another one. Here's that cup and handle again. This is a little bit more sloppy. There's the cup and the handle. Again, 38% retracement. Notice how tight that trading range is. That's the one you want to have. The ones that are really wide trading range, you can still trade them, but they're not as good. These, because of their such tight trading range, and the Bollinger Band's been squeezed so tight, you're probably going to have more or less explosion. I don't know, explosion is the wrong word. You're going to have a rally that's going to look similar to what happened here. That's what's coming next.
I like that cup and handle formation. I do. Basil follows it a lot, and my dad used to, and I just from the mentality of it, where I think it makes sense. You get back a huge loss, right? Everybody who was in a huge loss says, "Oh my goodness, we're finally back to even." You chop around for a bit before the next move.
So this one's is So what I'm saying is, let's get back. What I'm trying to conclude. These are the ones the words are worth watching, because they have huge. Both USAS is up around, I don't know, $7 or $8. If that ideally hold around that $7 range, but it may be another year before that thing starts breaking out again. So they're not to buy right now, but long term, I guess you can buy them. But wait for that
$2 billion company. I just looked at that one, America's Gold and Silver Corp.
Yeah, it's worth it. Actually, I bought it at around $1. Nice. Sold it around $3, and so that's that. I'm still happy about it, but it did get up here 100% above the upper Bollinger Band. That's the reason why I sold out in that vicinity. But anyhow, those are the ones to watch. So that's going forward. So this gold market's not dead. It is coming. It's due for consolidation. A lot of these big runs are going to consolidate. They're going to be a rotation. My opinion, back down to the smaller ones. That's the reason why I was pointing some of those smaller ones out at the beginning of this program. But on a bigger time frame, just kind of tell you where we are. This chart I showed last time, the chart goes back to 2014, and it's the bullish percent index for the gold miners / GDX. It's a weekly time frame. I did an RSI 10 on it. Anything below 25 is bullish. We're coming in around 24 right now. And we're in through the green area. Every time we get into this green area, that was a low. And you put an RSI with it, it gets closer to that low. So we're not breaking down here. Actually, this pattern even on GDX could possibly be part of a gigantic cup and handle thing. And I don't think GDX is going to go down much. I think it's going to go kind of just trade sideways. Probably bang around between the 100 to 115 range, 90 to probably to 115 range. I think that's where we're going. But it's not the time to dish gold stocks, because this area is in the bicycle. You just, the ones that have run up, you avoid, and you go back to the smaller ones. That's the reason why I pointed out that. But so on a bigger time frame, a lot of these big run-ups in the gold stocks are just completed the cup. What comes next most likely is the handle. And so that's what I'm saying. The ones that retrace back down too much, you want to avoid. The ones that don't retrace at all, that stay pretty much close to their highs, are the ones that to buy next. So that's the reason why I brought up this, get back to it, this GSG thing. So I'm thinking this one's just breaking out right now. And so it's this rotation has, if you look at it, since 2022, this stock has not done anything. It stayed between basically 20 to 23, and now we're getting an impulse wave breakout. So this is on a buy right now.
Yeah, I like that one, GSG. I remember you turning us on to that. I appreciate it. 2471, not that bad. And you really can, folks. Listen to that. Great advice, Tim. You can learn a lot on the strength of some of these equities, right? As we pull back, for sure. Tim, thanks so much for the information, man. Look forward to talking to you on Tuesday. Have a great weekend, all right?
All right, you too. Thanks a lot.
Thanks so much. We'll come right back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. NASDAQ 100 off by 400 points. We check out the heat map. My goodness, Microsoft off more than 5% right now. You got Eli Lilly off by 8%. Hims and Hers, they're going to start selling pills that are a copy of the weight loss drugs like Wegovy. You got Lilly trading down by 8%. AMD off by 4% right now. Google on their numbers. Boy, quite the charge higher intraday for Google. Gangbuster numbers for Google last night. The only thing was how much they're going to spend on CapEx. How about $185 billion? $185 billion. They spent $91 billion in 2025. They're forecasting 175 to 185 billion. But boy, it's been all upward trading on a negative market day. We jump around to some other equities. Walmart down by only 0.7%. And as I mentioned, Amazon. So Amazon after the bell, down $25 from where we were trading on Tuesday, man. Amazon's down 10% since Tuesday. Talk about risks in this market. 10% for Amazon, like nothing. So keep your spikes up in this market. In terms of what they'll be looking for after the bell for Amazon, $1.97 a share, $211.33 billion in 90 days. AWS, almost $35 billion is what they're looking for. Advertising, another huge component with large margins that's growing a lot, 21.16%. And cloud revenue, yeah, they're looking for, last quarter it was 20.2%, up from 18% in the second period. This quarter, they want to see more growth, 21.4%. So cloud revenue, they're looking for 21.4%. AWS, $35 billion. Those would be two of the biggest ones out there, but advertising is a big one. And then CapEx, they're at $125 billion in 2025. What are they going to be at in 2026? We'll find out. Amazon, down 4.25%. Gold, off $130. Oof. Look at that. We just broke the session lows coming into the close. We're back to where we were at 9 o'clock last night. You jump over to silver at $72. Protect yourself in this market, folks. Protect yourself. Get some stops in, man. You're going to have plenty of trading opportunities. We got a trader's market, but we got volatility everywhere. Thanks so much for tuning in, folks. Have a great night. Have a safe night. Appreciate you being here. I'll see you tomorrow morning for the